Good morning, everybody. Happy Monday. It's 5:40 a.m., September 21st. My name is Amal. I'm going to do your morning Bitcoin, altcoin, DeFi, and just traditional market analysis. There's a lot to cover, and I wanted to tell y'all that we've had a pretty successful, relatively successful September trading month. And I want you guys to let me know how your trading month for September has been in the comments below, because I really want to hear from people how they played this market. Because in my opinion, in our community, we played this market to a T. All right, first things first, we anticipated the sell-offs, the potential bottoms, even scalp positions internally quite well. And I think that is reflective in our community, in our Bitcoin trading area. Okay, we've talked about this numerous times. I did a bunch of analysis for our members at the beginning of September, and I'm going to put a link to that video at the end of this video to show y'all that how we mapped out most of September, and we're on September 21st today, right? So I did a video on September 2nd, and I mapped out exactly how I saw the market breaking from this point onward down, and then potentially bouncing back up into this area, which happens to be this 50 moving average, and then starting to reverse, and why this would be an implication of a potential bearish top, bearish retest right into this neckline right here, right? Again, neckline meaning, remember that we were going through a couple different scenarios, okay, again, at the beginning of the month, where this was creating a head and shoulders pattern. And once we broke down, right, the community and myself, we were talking about potential paths that Bitcoin could take from here. It could chop around and then start breaking down. But obviously that would mean that we'd have to first break the 128 moving average. The second path that we were talking about was Bitcoin comes back into the 50 moving average right here and then starts reversing down. And in that reversing down, we talked about if that starts to happen up here, we would start closing down altcoin positions, and most of which we were in profit on, and then some of which we are still technically holding in losses, but we're still kind of waiting for that signal to kind of sell our position. So this was one of our positions that we closed out on Rune, as you can see, right? So this is the Rune BTC chart. We made about, what do we make? I think we made about 60% BTC value and overall 40% on the entire position. So let's check out the Rune chart where it is, right? And again, this was, as you can see, dated for September 4th, right? So let's check that out. Okay, Rune BTC. So let's check. Okay, so here's Rune, right? We basically sold on this big pump right here, this candle on September 4th, as you can see. And now you can see Rune from the point that we sold, which is 8,600, to where it is right now, it's down 60%, okay? I think we also closed out our link position, okay? So let's check out link as well, right? Let me see here. I think this is probably over here in our link area. So I think link we sold out at a small loss, but our entry was $12.65. Our closing position was $11.21. And again, we mapped out perfectly, right? In this area, if link could not break above, well, we had to start letting go of that position, because it basically looked like this area right here, which was previous support, as y'all can see, then turned into resistance in this red block. So again, right, we realized that, okay, it looks like link is not able to break above this area. It might be time to start letting go of that position. So we took that negative 10, negative 11% loss. But again, where we sold out from, right, where do we sell exactly? 11.20. So let's get that where we are, 11.20 or so right there. Link is down another 21%, right? So we saved ourselves another 21% at a loss, all right? So it's not always that we will be able to close out every single position always in profit. That's not how trading works. you have to realize what is an acceptable loss based on the technical conditions, based on the market conditions that are forcing you to close out your position. And in this particular case, like I showed you, based on the simple technicals, is, well, it's as simple as looking at previous support now turned into resistance right here. And if the market starts breaking down, which it did right here, literally on this candle is when we got out. Okay, so you don't have to wait too long. When the market starts showing you signs of weakness, signs of breaking down, that's your sell signal. If the market spontaneously reverses from here, that's fine. But more often than not, the probabilities are in your favor that when the market starts showing you signs of weakness, starts showing you signs of deterioration in price, it is time to get out. So these are the rules and disciplines that we follow in our community. All right, y'all could go check out our website, thealphatrades.com. Go to the products page and you can buy our Advantage membership if you are interested. You'll get access to all these locked channels, as you can see. We had a couple of members, even on the free side, messaging us that they've had a very tough month of September, right? We, as a Advantage community, right, our Alpha Trades paying members, it wasn't the most spectacular September month, but I can guarantee you that we did not put up the same amount of losses that most people did. Okay, either it was maybe selling at the bottom, or people not understanding how to build hedges or close out positions and profits. These are all things that actually matter when it comes to understanding how to trade a market, how to invest in a market as volatile, as fickle and changing as crypto. Okay, it's a very, very finicky market, right? And so to trade it properly, you have to be a little bit more nimble in your positions. You have to be a little bit more flexible in your mindset that conditions could change. Things could instantly go, and I mean instant, from the context of crypto versus traditional markets, instantly go from, you might be in a bull market, full-blown bull market at the beginning of a month, and then the middle of the month, you basically broke down key support levels, and now you're about to start retesting that market into the bear market territory. This is literally what happened, in my opinion, basically at the beginning of September. Okay, I think we had, big, nice parabolic movement up, chop, chop, chop. I think this was distribution, and then we broke down. And again, I'm not going to lie, I was bullish right up until this point, until these two candles started breaking down towards, breaking past my key support level, which was 10,500. Okay. And once they did that, I said, all right, well, it looks like, party might be over. Let's wait for this thing to come up here, start, potentially shorting the market, start closing out some of our altcoin positions, and then we'll just short heavier on the way down. And that's exactly where I am right now. We mapped out this whole game plan at the beginning of September, and I will post the video proof, with a link at the end of this video. Okay. So, where are we right now, right? I think my technicals have played out quite perfectly. I think where we are right now is, I stated another piece of analysis just last night to my members. Over here, we talked about, price first of all, coming into this key area as resistance. This was another shorting opportunity that we had. But even prior to that, I had mentioned that when price was here yesterday, this was yesterday morning, okay, that was this candle right here. So let's, kind of dig into that. That was this candle right here, okay? So when price was coming into this area, I said, okay, well, if we cannot close below this area, okay, that means below this first X that you see, well, chances are we're probably going to head back up towards 11,000. I don't know what's going to happen at 11,000. Either we're going to rip through, or we're going to start, maybe rolling back over again. But I said, if we start closing back below this first X, that means we're going to take out all these X's. Why? Well, it's the matter of understanding how stop liquidity works, okay? So remember when price was kind of grinding up and down on this whole trend line, as you can see, right? Well, what that does is when price breaks up like this, okay, if it does not continue up, what effectively happens is bears are forcing the price to go up to trap more people at the top and then send the price spiraling down. And on top of that, not only do they send the price spiraling down, let me get rid of this thing. Not only do they send the price spiraling down, but what happens is your own conviction of having these stops set at these particular lows, as you can see right below the wicks. Well, all you have to do is trigger a domino effect, meaning, well, okay, you sell off a bunch of Bitcoin right here, and then you pull the bids, right? Meaning whoever's supporting price just stops supporting price. And then what happens is all these long positions right here who have their stops, they start colliding into each other. And then you get big cascading events like what you're seeing right now. This stop runs into this, and that runs into this, and that runs into this. And then eventually you'll probably be somewhere down here, which is 10,500, maybe 10,400 or something. Okay. I've seen this story over and over again, especially in Bitcoin, because I think I trade Bitcoin the best in a sense that, better than any other asset. I don't think any other asset plays technicals as well as Bitcoin does. Maybe Ethereum and maybe Link, but Ethereum and Link are technically dependent on Bitcoin's movements, right? So you can make the argument that Bitcoin is really the asset that you need to fully understand. So in this particular instance, what I'm looking at the market as is we're now seeing a cascading of all these longs that are about to get closed out, and that creates a pressure on supply, because remember, when longs are getting closed out, okay, that's effectively opening a short on the other side, meaning you're forcing a long to get closed with a short open on the other side. You're basically selling effectively. And so that creates additional supply, additional pressure in the market. And if there's not enough buyers to hold the price at this X or this X or this X, well, that's why you see this kind of cascading event, and everything gets sold, and every one of these long positions at every one of these X's gets closed out. Okay. So I wouldn't be surprised if today we see, I don't know, like a $500 candle or something. Technically, we're already at, what is it? We're already at almost $300, by the way. Okay. So, this is the kind of information that most people are not privy to. It's not really privy. That's not the proper word. It's rather that most people don't want to pay attention to something like that, or they don't want to believe it because their mindset is still, sort of focused on that bull market, hopium, right? And I think, for the most part, I was fairly balanced up until this area right here, which I mentioned to my community that if we get to this area and we start getting rejected, you best be sure that we're at least hitting this trend line right here, at least, okay? And as you can see, we're like $20, $30 away from that right now, all right? So that's the first spot, right? I think we're probably gonna bounce here. I don't know if we're gonna bounce here and then put a higher high. I have no idea, because here's the thing, right? I'm looking at traditional markets right now. Gosh, they don't look good. These are the NASDAQ futures right here. Opened, put in a lower low as per the Friday low right here, as y'all can see. The market is about to open in, 2.5 hours from now. And if the market starts opening red, that means Bitcoin is going to open red, okay? Last week, I wrote up a thread, okay, over right there, as you can see, September 17th. Most people in crypto are relatively new to financial markets, okay? And this is not a diss to anyone or any, other paid group or any other trader. It's just the fact that most people are relatively new. Most people started hearing about trading or investing, probably through crypto, and they started doing it more avidly, more actively since maybe 2017, 2018. And they don't understand sort of the whims and what the impact of traditional markets are on asset markets like crypto. And so when I started writing about crypto last week, most people didn't really understand probably why I was talking the way I was about being careful in the market. Don't be overly bullish, because there's a lot of sentiment analysis. There's a lot of reasons why you may want to be cautious at best. And by the way, even in this whole thing, I was also the person who was saying we probably should be making up to 11,150 all the way to 11,350. Even when people thought here, we're going to break straight down. So I was at least mentioning that from here, we have another potential long opportunity back up to this area. Okay. And I think I can actually even pull that up. So as you can see right here, right? So this was Friday. Okay. Friday, I mentioned this ABCDE triangle. I stated that we should be making it up, into this 11,1, what did I say? 11,150 to 11,300 area. Yeah, as you can see right here, even right there, was still thinking that we can hit 11K to 11.3K. It looked a bit grim, but I still believed in it, right? So the point is that there are certain technicals that play out so perfectly that sometimes people just don't want to believe it. And that, unfortunately, those are the best trades that a lot of people miss out on, because they're so perfectly timed and so perfectly flipping SR levels, flipping trend lines, etc. And most people miss out on that because their bias does not allow them to look at the market from an objective standpoint. And so in our community, all we really did was we kind of looked at this order block right here. We said, okay, if we're dumping right here, we might possibly push up, take out this X, and head towards this order block, which we did. And now we're starting to roll over again. Okay. Where could we go from here? Right? Where could we go from here? Okay. So I think that there's a high possibility that we bounce on this trend line. I don't know if we're going to bounce that high. I don't know if we're going to put in a higher high way the hell up here. I have no idea. I would figure that we may, if we do go up, and let's just say, let's just say we start closing above this line right here and we start holding it as support, then I don't see any reason why we don't get to 11,300 or maybe even 11,500, which is the target that comes from this descending trend line, right? So around this area, that's 11,500 on the dot. Excuse me. So those are the possibilities, right? If we do bounce here and we start getting up here and we start trading above this trend or this horizontal line, and then I don't see 11.3, or rather I do see 11.3 and 11.5 in the cards. If we break this trend line, then I could say with pretty high confidence that we're probably going down here to these lows, okay? Which is at least, $10,000, $9,800. If we get to those lows, I think there's a few ways to look at it, okay? If we're looking at it from the standpoint of moving averages, again, I made this chart, I think around like September 9th or 10th or something, somewhere around this area. So if we're looking at this chart, right, we rejected the 50 moving average. The 128 moving average right here is around 10,200, let's just say. So if we start seeing candles close below the 128 moving average, which again, rarely happens where you close a candle below and then you start blasting back up, okay? It hasn't happened over the past two-ish cycles over here in March and over here in August 2019, right? And by the way, I am fully aware that my 50 and 128 moving average theory only works for the last 3 cycles right here. But why is it that I am looking at only these 3 cycles and not this 2018, bear market or this 2017 bull market? Well, I think there's different cycles to be seen in this market right here versus this market that we're in right now, okay? This area right here. I think that after a big parabolic rise, first of all, in parabolic rise, there are no rationalities, okay? Moving averages, pivots, RSI, OBV, everything just gets blown out of proportion, right? And so technicals are not really that useful. I mean, I think they're useful, but they're not that useful. And so in that particular instance, right, I cannot apply the same technical strategies as I can right here, because for the most part, one could make the argument that from here, this has all been one large phase of a market, and this is all a large range, in my opinion. This is a bubble. This is the popping of a bubble. So you could see even the psychology behind both cycles or both phases are completely different, right? The emotions behind it, what drove both cycles of the market, they're totally different. And so this is why I believe that, yes, there are obviously some caveats of using my strategy of 50 moving average and 128 only over the last 3 cycles versus back here. Okay. But if we focus, and if you believe that my strategy of 50 and 128 moving average is potentially looking like how it did right here or how it did right here, that means that once we start piercing that 128 moving average, chances are we're heading much lower. Okay, chances are we're heading much lower once we start breaking that 50 or breaking that purple line, which is that 128 moving average. But we're not close to that yet, right? Like I said, we're at 10,200. And before we even get to 10,200, I mentioned that we're probably going to bounce around this area, which is this trend line right here. And that's fine, right? If we bounce from here, we get above this 10,800 marker, we should be getting to, back to at least 11,150, which is this key high, or 11,120, whatever it was, or possibly 11,300, maybe as high as 11,500. But again, I had a warning for y'all last week. If you read my thread, why I believe that the market was looking a bit uncertain. And again, I wasn't overly confident in saying that, all right, guys, definitely get a breakdown. I was just saying that you may want to be a little bit careful in thinking that everything just looks super bullish and you got no worries and let's just long everything. That's not the case. I think now is the time to start being a little bit careful, because what you're really seeing is, and what most people are ignoring is, if you're looking at assets that, in my opinion, are great assets, good assets like Link, like say, even ETH right here, right? Oops, wrong chart. Even ETH right here. They're all down like negative 30%, negative 40% from their highs. This one's down negative 25%. It was down all the way to negative 36% before. Link is, was down. How much is Link down? Let's just see. Link from its previous high, it's down 55%, right? I mean, that's a big shocker. Let's just check out YFI. This is, again, one of the coins that I pay attention to. Let's check out where YFI is. I think YFI is also down maybe 10, 20%. This key high right here. Oh, shit. Okay. Sorry for the cursing, but it's down 44%. See, you wouldn't think of this stuff because people are not paying attention. I think that most people get destroyed in markets when they have a strong conviction that things are still bullish, yet the market is already showing them signs that, hey, I'm already down 30%, 40%, 50%. And people are not looking because they don't want to believe, because they refuse to believe. And that's where most people get torched. And before you know it, next week or 2 weeks or 3 weeks from now, you might see all assets down across the board, negative 50, negative 70, negative 90%. Okay. And unfortunately, guys, that is a big part of the allure of crypto market, is that it has massive volatility. Okay. Volatility attracts traders, attracts all kinds of people, from, all walks of life, whether it's simply gambling or really just throwing your money into assets thinking that they can go up 3x or 5x. And sometimes they do. But if you don't take the profit up there, right, you're the sucker who's going to be holding the bag all the way down, back to your entry, and possibly into deeper losses like negative 50% and higher. Okay? So don't be a sucker. All right? So I think where we are right now is, I think the market's starting to show you signs. I think it's interesting. Here's like my bullish scenario. Okay, I think it's interesting that Bitcoin um, is probably down. How much is Bitcoin down? I think it's down maybe 15% or something from its key highs, right? So let's do its key high. Oops, its key high to where it is. Yeah, so it's down about 14.5, 15%. Bitcoin's down 15%, but altcoins are down 25% at least, all the way to highs of 50% down. Sometimes some of them are down, 60, 70%, right? I showed you Rune earlier. That was down almost, let me see how much Rune is down from the key highs on the Bitcoin pair. So let's go from this wick to where we are right now. So it's down 65%, right? So some of the assets you could clearly see are showing breakdown signs. So why is that important? Well, it's important because Bitcoin operates off of what we would like to refer to as, pure risk-on money flows. What does that mean? It's just a fancy word of how much do people believe that the crypto market can keep going up? Well, at present moment, it doesn't look like it, right? Because if money flows were kind of coming into the market and we were constantly driving the market up, well, we wouldn't have these big parabolic drops on the other side, which are negative 40% down, negative 50 or negative 60% down. Risk on means that, pullbacks, excuse me, risk on means that, excuse me, guys and gals. I hope there's some women watching. I really hope that we get more females involved in our community, involved in crypto culture, because we definitely, want more and more people involved with a diverse mindset, a different way of looking at markets, right? I truly believe that, both men and women, I think they approach markets with different skill sets and different emotional aptitudes, if you will, right? And I think both could be beneficial. So I really do hope that more women watch our videos and are involved. So here's the thing, what I was talking about, risk on, right? So remember, after we bottomed around March, we had a pullback for maybe a month, boom. We kind of took off for a good month, month and a half. Didn't really have any pullbacks, right? I mean, we had maybe 1 or 2 days corrections here and there, and then kept going up. Again, pullback right here, 2 days, pushed up. Pullback for, I think, 10 days or so, and then just went parabolic. And even within this parabolic move right here, you see we moved up, pulled back for 2 days, moved up, pulled back for 2 days, pushed up. See, this is what I mean that, the market is very risk on, very aggressively long, right? And it's in this kind of movement right here that ton of money is made, because all you have to do is wait for a pullback and buy and just long it, But when the pain starts happening on the other side, it's the same thing, right? You can't have things go up like this and not have the same kind of pain, coming back on the other side where the market keeps bleeding. Okay. So I think we might be in that phase where the market is showing you, what goes up must come down. And if we're making the argument about Link, where is Link going to come down to? I think Link probably comes down at least to this key area, which was this support before we pushed off in this parabolic fashion, which is around $7 or so. And if that breaks, I think we have this massive weekly level, which was, resistance, 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 and then resistance right there, which is around $5 flat. So $7 and $5 are the areas that you should be looking at. I don't think I would touch anywhere else. Okay, I would not touch Link anywhere else at any other price other than $7 or $5. Why? Because I don't think it's worth it. I don't think there's any single point of risk to reward that would make me buy Link after I see this cracking of this trend line, after I see this thing being down, 50% from its key highs, right? There's just no reason. Okay. So I think right now what the market is indicating to you, especially the altcoin market, is it's signaling that, hey, money flows are not coming in. People are selling. Probably big professionals, big whales are probably selling too. And if Link is one of those assets, which again, I believe it is an asset that will probably do well in the future. If Link is one of those assets, well, it will get bought back up. It will find a floor around 7. It will find a floor around $5, maybe even lower. And then you'll see possibly another rise up, maybe over the next several months, maybe over the next year. And that's where you want to be jumping in. I don't know if right now is worth the time, okay? So I think the altcoins are, in my opinion, leading Bitcoin to a certain degree, that, they're showing that there's aggressive weakness in altcoins. And the fact that Bitcoin is not broken down aggressively, I'm thinking that either one of two things is happening, okay? Either altcoins have broken down and they're going to find a floor soon, and then, Bitcoin is also going to find its floor soon, which again could be right here, literally at 10,500, or it could be lower right here, which is 9,800 or 10,000, or it could be, as per what I've been talking about, is these levels right here, 9,450, 9,100, and $8,800 at least. I'm thinking if we break down, like rejecting that 50-day moving average right here, I was honestly looking at these levels. I don't think there's going to be any stopping right here. Okay, and again, this is based on my daily and weekly perspective. Okay, now I'm not saying, okay, I'm 100% positive that we have to break down. I'm saying that I would figure that after you have a month-long consolidation and you break below that level with strong volume and you climb back up into its resistance, you're not just going back for another, potential retest down here. You're going lower, right? You're probably going much lower. But hey, I hope to be proven wrong, because, I don't mind picking up more Bitcoin long positions in this area, because that would be the most awesome risk to reward trade, right? Well, for now, I'm cautious. I don't think I can even call myself neutral right now. I'd say I'm now cautiously bearish. Up until this point right here, I was cautiously bullish, okay? And this is where I started putting out warning signs, as you can see on my Twitter feed. Let me see. So we talked about NASDAQ futures bleeding. We'll see how, the S&P 500 opens. We'll see how, things in the stock market opens. All right. I don't know if that kind of carnage is going to continue through the day. I have no idea. But it's visible, through smaller signs. Like you can see the DXY broke up overnight. You can see the ES started to break down. You can see the NASDAQ futures that I showed you started to break down. So now it's a matter of, all right, okay, we broke down. Do we see continuation down, or is this just, one of those piddly drops and then it gets bought the hell up and then we just take off? We trap a bunch of bears shorting the bottom and then we just start moving up, right? Let me see. One of my other favorite assets is DOT. Okay, so I've talked about DOT quite a bit with my community, and luckily, even DOT, right? We made some really good money out of it. Let me show y'all real quick, just so you believe me. Yeah. Wait. Oh yeah, here's DOT. So we entered around 297 average. Again, this was when the DOT redenomination had not happened. So it was like $297. But then, obviously there was a 100x token, how would you say, reverse token split, if you will. And so that 297 became $2.97. Anyway, point is, DOT was trading at $5.25 or something. And I said, all right, guys, I think it's time to start letting go of some of our altcoin positions. And so we exited out of DOT right around $5.20. And so as you can see, we exited up here. And let's see how much we're down from that point onward. We're down another 19%, right? So we avoided that loss as well. So it's not just a matter of, selling at the best possible price. It's that, did you sell? Did you make some profit? And after that, what was the damage, right? What was the damage done after you left the asset? Well, the damage was 20% more loss, right? And so I'm not going to touch DOT as well. I don't think I want to touch it anytime soon until I see signs in the Bitcoin market, in the altcoin market, starting to see money flows potentially step up to the plate and start defending key levels, defending positions. Let's see here. Let's check out LTC, because I know we have a lot of LTC fans, right? So let's check out LTC. So here's LTC. You know, LTC came back into its previous key SR level much before Bitcoin did, and you know, it started to sell off before, right? So even LTC, I'm kind of looking at this as, all right, well, there was a big, sort of head and shoulders pattern developing right here for sure, and we broke past that neckline. Couldn't even muster the strength to come up to that neckline right there. So that means, we're just kind of chopping around here, and now we're starting to roll back over. If we roll over, where do we go? I think the biggest key SR level is this $40 level right here. So from 45 to 40, that would be your next short trade if you want to get into a short. Okay, again, that's if you want to. Aside from that, guys, I think that pretty much shows you, where the crypto market is. Oh yeah, so my bullish case, like I stated earlier, was first of all, we need to get above. First, let's find support right here, 10.5, 10.6, wherever that may be. Get above 10.8. If we can start getting above 10.8, let's get to 11.3, 11.5, and then let's see a reaction right there. Okay, because I'll tell you one thing. Okay, if we get above 11,500, which is above this 50 moving average, and obviously a couple $100 above that with high volume, chances are we're probably going to 12,000 and higher. To be honest, I would probably say we're probably headed back to 14,000, because if we're breaking above this 50 moving average and we're turning this trend around right here, something is wrong. That means the bears are not strong enough to force the price down. That means we're probably headed back up. And if we're headed back up, it's going to be an epic short squeeze on the upside, and there's going to be a lot of buyers stepping up to the plate, because I'll tell you right now, most buyers are going to look at the market the same way I am. If they're looking at this and say we do this kind of thing, and we're breaking above this area and holding right here, and we're starting to push up, I mean, it's game over for the bears. We're going to 12,000, at least it's 12.5, and then possibly way the heck up here around 14,000. Okay, there's no other way to look at it, right? If you're breaking above key resistance levels and you're not capitalizing on the moment where you had a month-long distribution and the big sell-off came back to retest this area and you didn't break for a lower low, the bears are screwed. That means we're probably going to rip up from here, at least, like I said, 12.5, maybe even 14,000. But that's my bullish scenario if we start turning around. Whether we turn around at the 120 moving average or we turn around literally right here, I don't care. At some point, though, we got to turn around. But if we keep bleeding, I'm telling you right now, we're hitting these levels. Okay? We're hitting these levels more than likely. So these are the things that you want to be paying attention to for the next coming days ahead. All right, guys? I think I've taken up enough of your time, enough of my time. You have our Discord link in the YouTube description below. Leave us a comment of your thoughts, what you're trading, how you're looking at the market. And if you like our videos, right? We put in a ton of information in our videos, ton of content, and I hope you all enjoy. Please do share our videos. Write us a comment or write us a tweet on our Alpha Trades Twitter. That's it. You'll take care. Cheers. Be careful in the market. Take profit. Set stops. Have a good rest of your Monday.